Good afternoon, everyone. It is 15 minutes to the close, and it looks like it's going to be a very strong close. The markets are on a tear, mostly being led by the financials today. There was a slight uptick in the yield curve, and I think investors looked at that as a good reason to buy financials. But then again, financials have been kind of on the bottom of the board, and for them to bounce isn't really unexpected. What's interesting today is the big cap leadership stocks are not leading. It is without a doubt the financials today. We're also looking at some extraordinary percentage gainers today. Again, from the list of the unexpected crowd. Unexpected in the sense that these aren't earnings driven. These are just off the bottom picks. This is part of the diversification that people are looking to create since they've mostly chased up the big cap energy stocks only to get battered in those. They chased the financials for a little while, got battered in those. They chased, and again, the airlines, and they got battered in those. Cruise lines got battered in those. So, yeah, okay, went back to the tried and true, the big cap, mega cap tech stocks and a bunch of healthcare stocks. Yeah, there's quite a few healthcare stocks in. I'm going to talk about Inovio in a second because I think it was maybe Robin last week had asked about Inovio, and we talked about that, but I'll come to that. But the leadership today is mostly financials, and that's because, well, it's rotation time, and any good news about Main Street opening up, any good news about the addition to PPP going through the banks and then picking off their 5% or so is probably positive for the banks. But what we're seeing really is the idea that Main Streets are starting to open up. The markets really like that. If the worst is behind us, then there are plenty of bargains still out there. So don't be afraid if you've missed the big move up, and it has been a rather spectacular move up. The numbers are quite staggering. I can get to those, but suffice it to say that we're well off of the March 23rd lows. We are certainly closer to the all-time highs than we are to the lows, and that bodes well in the meantime. But does it mean that all is good with the economy? Because we know it's not. But we talk about this. It's the battle of heavyweights, the battle of the economy. It's heavyweight leaning on the market, except the market has managed to just exit from the weight of the economy for the time being and doing its own thing. So not really that far off the mark in terms of investors discounting all of the bad news and doing what they can to pick up bargains anywhere. About those bargains, I want to take a look today after the close at my list and see how it compares to how stocks have done today. We've got earnings this week. Tomorrow, I'm going to give you some of my picks for the long side, and I'm going to give you a couple of shorts. But right now, I think a lot of folks are probably looking for some exposure on the long side because the path of least resistance right now is up. What we always worry about here, well, what I worry about, maybe you don't worry about, is the numbers that come out on the economy and the leadership of particularly the 5 stocks that represent 20% of the S&P. And 20%, let's just call it across the board. Whatever market benchmark you're looking at, I'm talking about Amazon, Apple, Microsoft, Google, and Facebook. Those stocks have done very well. Google and Facebook lately because of the big acquisition of the big investment, that $5 billion investment they made in India with Reliance Telecom, a very savvy deal, which gives them tremendous exposure there and a leg up on the Indian market, which is in Facebook's interest for sure. So Facebook popped on that news last week, and it has held up. But Google hasn't been as exciting as an Amazon or even a Microsoft or even an Apple, which is showing some pretty good qualities lately in terms of trying to bounce and get back to its old self. Still, we know that those companies are the big cap leaders, and money is going into them partly because they are very liquid. If you want to exit something and you're a money manager and you have to apply a lot of capital, you want to go into the big names where there's momentum. Why? Because you want to have them on your roster. Yes, you play with those guys. That's your team. You are in those. You didn't miss it. And so that makes sense. It also makes sense that big investors are in those because should they want or need to exit, there's plenty of liquidity for the most part. So those stocks, again, makes plenty of good understanding as to why the market has gone up. But we look at the broad market and we know it hasn't gone up. That means there are lots of stocks that are still very fairly valued. The market as a whole is trading, S&P is trading a PE, a forward PE of about 20 times earnings, forward 12-month earnings. I read a bunch of estimates over the weekend, and there seems to be an amazing consensus of more than a handful of economists who believe that 2021 is going to see record earnings, and that justifies the market multiples they believe now because they're anticipating the market moving up. So we're seeing that right now. The winners today are all over the place, and there's some odd names there. General Electric is up 2.8%. Ford Motor up a whopping 5.5%. We got Nordic American Tanker, which makes sense because we know all the tanker lines are doing very well. That's up 20%. Advanced Micro up a little bit. American Airlines down 276. Carnival up 890. So again, bargains down. There's some beaten up stocks like Carnival showing signs of life anytime the market's going to move like this, especially when the leadership stocks aren't the big caps and the broader market seems to want to play catch up. You're going to see those kinds of names pick up in percentage terms. But look at Bank of America. It's up 6.2% today. So, I mean, a tremendous run for the banks today. Boeing, one of the stalwarts, doing absolutely nothing at 28.67. Macy's, this is indicative of how the day goes when there's a big move. Macy's is up 10% today. Go figure that. Why? Short covering. So a lot of short covering. We talk about that regularly. We have short covering on days where maybe some earnings will lead the market higher, days where perhaps we'll see Asian markets tick up, which we did today. European markets follow, futures change, and next thing you know, everybody needs to get on board, especially the shorts, so they scramble to cover. That brings in the momentum buyers. That brings in a lot of the other folks who are missed out on the rally. So we're seeing a lot of that. We're going to continue to see that. Microsoft down a little, about 0.25% today. And we got Norwegian Cruise Lines, another, well, we'll just skip all those. Facebook down a little bit today, down 1% today. So Citigroup, one of the big leaders, of course, up 8.14%. Again, speaks to the banks. Even some of the energy companies are getting a little bit of a bid, but for the most part, they're struggling. But a minor bid here and there is a win for them because they've been so beaten up. Again, there's plenty of places to look for companies that are still undervalued by the market. So we're going to look at some of those tomorrow. I'm going to give you some of my favorite picks, long-term picks, and also some good tradable stocks. But let's continue on with how we're looking into the close. Dow is just off of its highs, and we're probably going to close up there. It wouldn't surprise me to see a move into the close to the high side and maybe even close on the highs of the day, given the strength we've seen all day, for all the indexes. Let's have a quick look now at some of the other, and let's take a look at Inovio. We talked last week about Inovio and the fact that some of these stocks looked very richly valued. The whole prospect of an Inovio or any of the other companies that have been bid up really wildly in some instances because they may lead in a template for some kind of treatment or perhaps even a vaccine down the road. But any of those companies that are in the hunt have been bid up, and there are quite a few of them. I think the area is entirely, the whole sector is frothy. They're not all going to be winners. So Inovio today, I don't know what the news was on Inovio today, but stock's down. It was down 8% early. It's down about 6.5% now. So we got to be careful with these names. And I think as earnings come out, we're going to see some stocks who do not meet earnings estimates get taken down. Some of them will get taken down hard. But those that come close, that maybe not they don't beat, they come close, are probably going to be accepted as if, well, okay, could have been worse. And some of those are going to get bid up. Anybody that beats, obviously, you would expect to see them go higher. I think stocks that are unexpectedly higher in terms of earnings are going to be big winners. I think the expected big names, when their earnings come out, I'm talking about Amazon, I'm talking about Microsoft even, I think that folks are going to look at that and say, well, we knew that they have been going up through the roof. We expected earnings to go up. We priced in better earnings. And those stocks are the ones right now, especially this week. We've got a bunch of these big names coming out and reporting this week. Wednesday, we've got a couple. Thursday, we've got a couple big names, which we'll obviously break down after the close on Wednesday and Thursday. But if the big leadership, the big cap tech stocks come out and disappoint, they won't disappoint in terms of their earnings. They may disappoint in terms of beating their earnings. And I think they may disappoint in terms of any guidance, because this is the time for companies to come out any way they can to gently guide lower. It's only in their interest to guide lower. Any company that guides higher right now is a company you want to own. So if you're watching earnings, and you should be, and you're looking at some names that come out with better than expected earnings and that guide better into Q2 and give full year guidance that's more optimistic, those are the companies we want to start buying. So we've got plenty of momentum to the upside. Again, the weight of the economy doesn't bother the market in here, and there are a lot of reasons for that, but the question remains for everyone, is it sustainable? Are we getting to a point where the valuations are somewhat ridiculous, considering we don't know where the economy is going in terms of how bad it's going to get, how long this recession is going to be? We're all looking at, well, everyone seems to be looking at the third quarter as going to be a big bounce off Q2 in terms of GDP pop. And then Q4 maybe will be up another, who knows, close to break even on GDP. Maybe we're down 2-3% in Q4, which would be very optimistic that we would gain all of that back in whatever we expect to lose Q1, Q2. And of course, this Wednesday, we get the first look at first quarter GDP. So again, just to remind you, the range there is minus 0.3 to minus 10. And the 0.3 was the Atlanta Federal Reserve GDP now number, and the down 10% in Q1 on GDP was JP Morgan Chase. So we've got everything in between there. We'll find out soon enough on Wednesday. Talking about GDP print, the print is obviously going to be important, and it's going to be looked at every which way. And probably, if the number is really bad, then the market might take a hit. If the number isn't as bad as expected, if it's down 1 or 2, maybe 3 percentage points, then that's going to be a win for the market. I think the market's going to assume that anybody who wants to look at this, at the peak infection and the peak mortality and the peak of the economy closing down, on the other side of that is going to see that if we're only down that much in Q1, then Q2 may not be as bad, since we're already starting to open up and we're already one month into Q2. So if we start to open up sooner rather than later in Q2, then Q2 may not be down 38%. As you know, one of the estimates has it. So GDP is going to be important, and we're going to get a lot of commentary on the GDP print on Wednesday. So that's going to be very interesting to watch. The market is obviously doing its own thing. So we're going to try and see if there's any relationship value to the GDP print and how the market reacts to it. That'll be plain to see in the futures pre-print. And then we'll see what happens after the number comes out, and then how the market reacts during the day. At the same time, however, we got some big earnings. So it's going to be a battle between GDP number and some of the earnings coming out. We could get a double whammy on Wednesday, followed by another hit on Thursday. If the numbers are negative, really negative on Wednesday, the earnings come out, and again, I'm talking about some of the big cap tech stocks. If they come out and their earnings are underwhelming and they guide negatively, or their earnings really are way below expectations, then they're probably be some profit taking in those stocks, and that could lead the market down. We could see that again on Thursday. Facebook and Google, we know that ad spending is down about 15 to 20%. That is the number most analysts are batting about. So I don't expect Facebook or Google's earnings to be stellar. I expect them to be reasonable. I expect them to be year over year under 2019's Q1, but I don't expect them to be that bad. We'll see. Again, we're looking for the leadership stocks and how investors react to their earnings. So a lot going on this week. It's going to be a really interesting week. So let's take a look and see how we close. We'll talk about some, I freshened up the support and resistance numbers for you, and we'll just go over a couple of other things. And we're going to make it a short session today since I've been keeping you guys extra long. And tomorrow is going to be a little bit longer because we're going to go over a bunch of names and see if my computer holds up and I can throw up a bunch of graphs on the names that we're looking at. Again, there's going to be a few longs, some of my favorite picks, and a couple of potential shorts. So let's take a look at where we are. The Dow today closed at 24,171. Now, that's a great move for the Dow. We're up 1.49%. Let's see, that's not fresh. 128. That's maybe because I got a smudge in the glasses. So 24,128 on the Dow. The high for the day was 24,207. No, that's an interesting number. We won't worry about the downside today because there really wasn't any downside. We opened at 23,866. We got down a touch below that to 23,840. But we're not really looking at the downside today. We're looking at the upside. So we opened up reasonably. We continued to see strength throughout the day. It picked up certainly in the afternoon. So we're closing 24,128. We had resistance we had some at 23,826. 23,826. Had no problem getting to that. But our real resistance was 24,040. So 24,040. We knew that's been a resistance for a while. We did close nicely above that. Intraday, we got well above that, and we came just below the 24,250 level. 24,250 is now our next resistance level, and it's a pretty good one. So we'll see how the market fares when it gets up there. Above that, we've got 25,230. So we have some big gaps. This is what I was talking about last week. We have big gaps on the way up here, which all the technicians know that. And that means really that the number of, it's not going to take a lot for markets to go higher because they can fill those gaps. Then we got 26,000. So pretty healthy numbers there. On the S&P, we've got them close at 2878. And take a look over some of the other stuff here. 2878, and we got a high there of 2887. We blew through 2842, blew through 2844. We got up, we blew through, not blow through, but we got through 2880, which was really our next important resistance. We got above there, and we closed just below there. So 2880, interesting point. We'll see if we have that fares tomorrow. Above that, we got 2934, then 2954, 3000, then 3286. On the NASDAQ, which has been the leader in terms of indices. Obviously, we know why, because it's got the big cap mega tech stocks in there and a bunch of the healthcare technology stocks in the NASDAQ too. So NASDAQ has fared very well. It fell the least and it bounced the fastest. So we are looking pretty good on NASDAQ. Closed at 87.30, and the high for the NASDAQ comp is 87.54. So at 87.30, we didn't. The NASDAQ composite didn't do as well as I thought it might have in terms of making a bigger move up. And that's because the big cap names really we saw just went over some of them weren't the leadership stocks today. So the Nasdaq had a nice 1%, 1.11% move up, but we don't see the big names moving it above a lot of resistance. So closing at 2730, we did get through 2670. We had 2707. We got through that. Next is 2753. On the high of the day, we got just below that, just above that. So 2753 still looks like some resistance. We'll check that out tomorrow. Then above that, we got 8779, 9611. So I've got a couple questions here. Will the Fed have to disclose how much money they have thrown into the markets? Wow, what a fantastic question. Thank you, Walt. The answer is no. The only thing we're going to see a reflection of in terms of the Fed is their balance sheet, which we know over the last 2 months increased 58.5%. So they're now sitting on about $6.2 trillion in assets on their fake balance sheet with no capital to support that balance sheet. So no, we don't know. We're going to get ideas of where the money is going to go in terms of large swaths of it is going to go to underpin corporate bonds. Some of it's going to go support certain of the special purpose vehicles that are going to be set up, and we're going to find out those big numbers, but we're not going to find out where the money is going to whom. And one of the reasons, Walt, is that the Federal Reserve doesn't want to name names. It never names names. Well, not never. It rarely, if ever, names names. And that's because it's about the secrecy of the privacy and the fact that if they were to name names, it's the same thing if the Fed was going to a particular bank went to the discount window, the Fed doesn't announce that. Other people will find out about that, but nobody wants to know, or investors want to know, but the banks that have to go to the discount window, the corporations that are going to the discount window, and these are the borrowings from the Fed that we're never going to find out who's going to. Why? Because if we knew that XYZ corporation had to go to the Fed because they couldn't borrow money anywhere else, then guess what? Everybody would jump on their equity and push their equities securities down. So nobody wants to admit, and the Fed doesn't want to tell who's backing up to their back door and loading up whatever money they need to salvage their businesses. So we're not going to see that. The big picture is maybe this particular program, that particular program, the nuances and the granular stuff, not going to happen. JWN, yes. Nordstrom, how about that? I think Nordstrom, the rumor was, it was more than a rumor that Nordstrom was going to declare bankruptcy on Sunday. So here's the stock up 13.9, call it 14% today at 20.33. Risk reward. Take it as a speculative play because that's what it is. I don't know if they're going to declare bankruptcy or when. All I know is that right here, it looks awfully attractive in terms of looking for puts, especially after this big move today. They're still expensive, mind you. Yeah, they're not cheap, but I think there are plays there. I would certainly look at that. Again, this is part of this extraordinary move on a day like today, when talk over the weekend is more about mainstream businesses opening up, whether it was Georgia, Texas, here in Florida, there's a lot of talk about that. So everywhere you go, there's the bright side. Everyone is shining a light on things are opening up and there are lights on inside. And next thing you know, we'll be going in. The next thing you know, there'll be sales and revenues. And next thing you know, this market's going to go higher and it's all good. Well, that's a good. We love to see those bright shining stars and the lights inside. Keep the light on, please. That's what we want. But that is an indication today of Macy's popping, of Nordstrom popping, is the idea that, okay, if we're on the other side of this, retail is going to bounce because there's pent-up demand. Yeah, it probably is a lot of pent-up demand. I don't know if people are going to go to Nordstrom's for that. I don't know if people are going to go to Macy's for that. I don't even know if they're going to open. Yeah, Nordstrom 20.33, the high today, 20.56. You want to take a look at some puts there? I know I'm going to. Let's see. Win asks, would you sell Amazon and Facebook before the earnings? Wow, great one. Yeah, I would, because I take risks. I believe that Amazon and Facebook probably more so than Amazon. Amazon, I got to believe that the numbers from Amazon are going to be good. And they do a very good job of talking down their earnings, and so they generally come in line. And they're not crazy about guidance in terms of knocking down too much where they beat. They're very good about guidance, but I don't think that Amazon's numbers are going to move the needle. I think they're going to be expected to be good. I think they're going to be good, because heaven forbid that they're not. If everything that Amazon does, they haven't done in spades over the first quarter, and certainly into the beginning of the second quarter, and they come and they underperform, Amazon's going to get hit. So I don't believe that they're going to underperform expectation. I think they're going to meet expectations and maybe beat if they guide it properly. But then again, would I sell them or buy puts on them with earnings coming out? No, because Amazon has been the leader of leaders. And as the leader of leaders, then it's not, if it falls a little bit, people look at that as an opportunity to get back in. If the market is strong, when the earnings come out and bang, or the futures are strong, if they come out before, I'm not sure if they come out before the open, yeah, it'll be a buying opportunity for some people, because again, it's Amazon. Facebook, on the other hand, yes, I would take a shot with Facebook and play a miss on their earnings, and possibly even some negative guidance. Because if ad spending is considerably less, and it could be, and if Facebook guides down because of expected weaker ad spending in Q2, yeah, I think Facebook will take a little bit of hit. It's had, Facebook wasn't one of the big bouncers off the bottom. And that's the reason, because analysts and investors understood that Facebook wasn't going to be, gaining a lot of earnings power in the market where ad sales were going to be off. So the big move lately was really about the move that they made in India. And again, it's a positive move, and it's a good move. It's a good reason for the stock to be up. But we'll see what happens with earnings. Yeah, I would, because I'm a speculator, I would look to play the earnings to the downside. Michelle, what is your take on Boeing in the short term, with it putting people back to work yet losing contracts? Michelle, I don't get it. I don't get how Boeing is up here. I think Boeing should be trading around $90 to $100, and even then, that valuation begs the question: what earnings? So, getting back to work. Don't forget, as you point out, there are a lot of contracts that are being canceled. Some of them are yet to be canceled because the airlines are trying to hold on, because if there's a lot of cancellations, Boeing's going to stop production. And then if you cancel, then decide, things look better and you want to start you have to get back on the back of the line. So that's a problem. But I don't see airlines running to bid up contracts in Boeing. There's going to be plenty of aircraft available. A lot of the leasing companies had to take over purchases from some of the airlines who didn't want to acquire the planes that they had under contract, and leasing companies bought them and they're going to lease them back to the airlines. So they're at risk. They're hoping, and we're going to look at some of those names later in the week. Some of those leasing companies may run into trouble. But no, I don't like Boeing. I would look at Boeing below 100, maybe put on a primary position there of about 20% of the capital I want to allocate to Boeing. And then if it goes lower, I would add accordingly. But I just don't see Boeing stock pickup. Now, here's another example. If things are looking better in terms of the economy opening up and maybe people starting to move around a little bit, you would think that Boeing's shares would have a better reaction today. They haven't. They didn't have a good reaction today. In fact, they had a very horrible day. The low today was 123.83. Stock closed at 128.72. So it was trending down. It managed to catch itself from falling and breaking some support. It's really right at support here, Michelle. Right at support here. We break here. It's got. I could see it down. It broke 125. It had some minor support at 125. That was psychological support. It broke that today. So I see it potentially going back to test 100. And if it doesn't hold 100, then it's going to go check out its lows at 89 and change. And that's where I would look at taking an initial position. Let's see. Jay, let's see. How will the financial failure of the states of New York and California affect the GDP and stock market if no bailout? The states have to get bailed out. The federal government has an obligation to the states, and I doubt the states can't declare bankruptcy. I don't think it's constitutionally possible, and it wouldn't make sense for any state to declare bankruptcy because that would set the tone for other states declaring bankruptcy. Why would you declare bankruptcy as a state? What, are you going to just basically write off your debt? I don't know that that's even possible. And a lot of that debt is to the federal government. So that doesn't make a lot of sense. I don't see the states defaulting on their debt. I see them getting bailed out. I see them getting support from the Federal Reserve vis-a-vis the Treasury, but I don't see the states declaring bankruptcy. I don't see that move being viable. So I don't know that that has any impact on GDP because I don't see it possible. If it is possible, if it does happen, then things are a lot worse. And that could create a cascade across the country. And then I think the expectations for GDP to get hit harder would be intense. So I just don't see it. See, Dari asks, Shah, CHWY, still see it going higher. Got out of my option today for a nice profit. Was I early? You got a profit. You're never early if you make a profit. You're never late if you make a profit. You're right on time. So let's take a look at CHWY here. Yeah, when it comes to options, I particularly like taking profits because when you have moves like we've been seeing, if you have profits, we know that the move can reverse. This market, anything is possible. Yes, the trend has been up. Yes, Chewy has been on a massive run higher. Yes, it still looks good. It looks like it's even consolidating here to take another leg up. So if you made a profit, just be happy. Yeah, I wouldn't hold on to options too long. The closer you get to expiration, the faster the premium is going to decrease. And if you're not in the money, it's going to decrease a lot faster. And I just don't like hanging on to stuff when I have for me, a nice profit is 50%, 50%. If I've made that move, and especially closer towards expiration than the midpoint of before, of expiration, I give myself a range. When I trade options, if it's, let's just say if it's 30 days or it's 60 days, my halfway point would be 15 days. My halfway point on a 60-day cycle, I'm looking at 30 days. If I get 40, 50% within that first part, within that 15 days or the 30 days of a 60-day cycle, I have, in other words, by cycle, I mean, I have 60 days for my options to do what they need to do for me to make money. If I'm halfway there in that cycle of that trade and I've got 50%, unless I see tremendous underlying strength, I'll take usually half of the position off. If I don't see the strength, I'll take the entire position off and be very happy. But I'll take half the position off, and if I see any pullback in the market, not even the stock, in the market, and I think that's going to weigh on I'll be out as fast as can be. Otherwise, I'll let it ride. I got strength. I'm always going to try and let those rides. I have been hammered so many times on the back half of a trade when I thought everything was good, only to see literally, maybe with a few days before expiration, and I'm just trying to squeeze out an extra, 5%, something greedy. And then next thing, something happens and the option will drop like a stone, and there's no retrieving that lost profit. So again, take your profits when you can. VC asks, what are the odds of a W shape versus U, L, or V recovery? Golly, everybody's asking that question. Far and away, VC, the consensus of economists and analysts is that it's going to be probably a W. But they're looking at the first leg up of the W as being pretty strong. Whether it is sustainable and becomes the V, no, it's going to be like a halfway up the V, and then a lot of the expectations are for us to falter and check. But there are just as many estimates for that W to start to form, and then maybe a vaccine, maybe then we have better treatment protocols, then there's a lot of hope that that can really turn into a V for the economy. I don't see it. I see a W at best, and I see a wide W. That's my best case scenario. Frankly, I see more of an L-shaped. I think we will have a better idea as we get through the end of the second quarter and we start to see really what's happened to the economy in terms of opening up. But I'm deathly afraid that the economy is not going to bounce like the stock market has bounced. And I give you a lot of the reasons all the time. We're going to look at those reasons again on Thursday when the initial jobless claims numbers come out and the continuing claims numbers. Again, important stuff. Let's see. Yes. Poe's asking, let's take a look at PLSE. And Pulse Biosciences, I don't know Pulse. I'm looking at the stock and I see obviously a 21% move today. So stock soars to lead to pre-market gainers. So Pulse Bioscience, I don't know what the news. I don't see a lot other than FA's registration statement for a rights offering. That's not going to make it move a lot higher. So that's old news. That's April 6th. So I don't know what the news is today. So we have positive study results coming out of yet another biosciences company. Yeah, good luck with that. Positive results. We've seen positive results from Gilead. We've seen positive, and then only to see that stock get slapped. Maybe Inovio had some positive statements, and maybe that got slapped down today for a dose of reality. Pulse Biosciences, what I'll say about Pulse Biosciences, if you own it, if you own some calls, then try and ride it because there's a huge gap. This stock obviously gapped down and made an awful gap down back there in, we'll call it almost mid-March, just prior to February. And ugly. It did bottom and it did make a nice, in terms of technicals, rounding type bottom where it was consolidating, and now you had this big breakout move today on the heels of a pretty good Friday for the stock too. But the big move today is extraordinary. If you own it, I would ride it a little longer. I would look to see if it possibly can fill that gap. There's another situation where, because it's a bioscience company, because it's got its hat hanging out there in terms of is it going to get the contracts for treatment? Is it going to be the winner in that lottery? If it's not, that stock's coming right back down. But right now, given the gap, I would stick with my position and see how high it can go. Probably start considering putting some stops in there, especially if you have a nice profit. You don't want to lose that. If you bought it near the bottom, you had a great run, don't look a gift horse in the mouth. Okay. All right. I think that's it for the questions today. And thanks very much, everybody. We'll be with you tomorrow. We'll look at some long picks and a couple of short picks. Have a great day. And we're going to have a good look at earnings tomorrow. And cheers. Talk to you then. Bye.